What's up, guys? Frugal BC coming at you. Today I want to talk to you. I want to do a basic investing strategy video for beginners. I want to walk through a few different investing strategies and you can choose which one you like. All that's going to be on today's Frugal BC. Hey, what's up, guys? Frugal BC coming back at you. Today we're going to talk investing strategies for Bitcoin, and this is going to be really basic level. So I want to start making more videos geared toward beginner crypto folks. You know, I was one at one time too, and I've had some friends ask questions, and based on the questions they've asked, I realized that there's a lot of people who don't understand even the very basics of crypto. So today I'm going to talk about the investing strategies, and I'm actually hoping later in the week to have a talk with, like an interview basically with Shelby Grosh. I'm going to include his channel below. He's shouted me out before. I want to shout him out too, and also do a video with him. So look for that coming up. We're going to be talking a little bit about investing strategies, but today I want to go to the very, very basics. So I'm going to talk about 3 investing strategies. Now, before I start with the crypto investing, I want to talk about my strategy for traditional stock investing, or stonks as the crypto folks like to call them. I do have a pretty significant stock holding. Now, what I do with index funds, well, I should say with stocks, first off, pretty much all my investing in the traditional markets is in index funds. I believe in a buy and hold strategy through dollar cost averaging, and I'm going to talk about that when I get into my crypto strategies. But basically what I'm doing is whenever I have extra money from getting paid, I spend it on index funds, and I just buy it periodically, and that's basically dollar cost averaging. I'm going to explain more in just a minute what that is. So I have a very hands-off strategy with stocks, and that is, I have more, just to be clear, I have more stocks than I do in stocks than I do in crypto. That probably will change as the bull market continues. There's a very good chance in the near future that my crypto will overtake stocks, just because crypto, there's a lot of value to be had there, because you're still really at the very early stages of crypto investing. Okay, so let's get into, so strategy number 1 is basically what I call buy and hold, and that's, like I said, that's what I'm doing with my stocks. My stock portfolio is basically buy index funds, why do I do that with index funds? Because playing the entire market has been shown to outperform just about every actively managed portfolio over 30 years. So if you take a 30-year time horizon, 99.9% of the actively managed funds will not outperform a simple index of all the funds. So your best bet is to take the index. You might be able to, you could have better results through active trading, which we're going to talk about later in terms of crypto. But you really got to know what you're doing, and the odds are you won't do well unless you are just a genius at it. So the data, it's not just one study, multiple studies have been done on this, and the people who have the best success tend to be the ones who just invest in simple index funds and leave it alone for a while. So you can do the very same thing with crypto. So basically, say you get paid every 2 weeks, you get your paycheck and you put $50 into Bitcoin, $50 into Ethereum, or whatever makes sense for you. Maybe that's more, maybe that's even less. And you're basically buying and holding and waiting for it to go up. Now, if you had done that at the very beginning of Bitcoin, or even 5 years ago at Bitcoin, you'd be up quite a bit, substantially. So it's not a bad strategy. And what you're essentially doing, if you take that route, is your dollar cost averaging. So what does that mean? Well, when you're dollar cost averaging, that means that you are, so if I take $50,000 and I put it in all at once, I'm doing the opposite of that. I'm taking one buy, and maybe I'm buying when it's really high, or maybe I'm buying when it's really low. The point is, I'm taking all my money and putting it into at one time point. With dollar cost averaging, instead, you're making little bets, or basically making little buys periodically, and you're not really worrying about the price. So I'm going to talk about why I don't think you should do that with crypto, where I think it is a good idea with stocks, but I'll get into that in a second. So dollar cost averaging. So I'm buying, say today I buy Bitcoin's at 50,000. In 2 weeks it's at 60,000. I buy that. The next week it's at 40,000. I'm making these up just for the math's sake. I buy at 40,000. So I bought those 3 periods. Now the average of that is going to be 50,000, even though at one point I was buying at 40,000. At one point I was buying at 60,000, but the average turns out to be about 50,000. Dollar cost averaging is a good idea when you think the overall market is going to go up over time. Sometimes you'll buy a little high, sometimes you'll be a little low, but it'll kind of average out to something halfway decent. So why don't I think that's, well, I want to start off by saying that is a perfectly legit strategy. And if you want to take the hands-off approach, I don't blame you. And in fact, if you are just getting into crypto, this is probably what you should do for now. You just start accumulating, just start growing more crypto. Don't play around with fiddling around with little buys and sells. You're probably just gonna hurt your own profits until you really understand this stuff. So there's one more step above this that is still pretty safe, and is one reason why I recommend this in crypto versus investing. And it's called taking profits. And there's a very good reason why I support the idea of taking profits. Crypto has cycles, and the cycles are fairly obvious. If you look at my video on the golden bull ratio, you can see more about why that is. But basically, crypto goes through 3 phases. So there's sort of a run-up phase. There's a crazy bull market phase where the crypto goes crazy. You know, we saw that in 2000, at the end of 2017 into 18. And we were supposed to be in the middle of that right now. And we got up to 60-some thousand, and then it crashed because of market manipulation. So Bitcoin and other cryptocurrencies, but especially Bitcoin, tends to go in these cycles. And then there's a huge bear market. So we're scheduled to have a bear market leading up to 2024. Why is that significant? Well, every 4 years, the amount of Bitcoin that is produced through mining halves. And so some people call that the halvening, and the market cycles are kind of based on that halvening. So they're far more predictable than stock markets, which can be just all over the place. So what we want to do, the one active thing that I recommend doing once you've gotten comfortable and you've built in a pretty decent crypto portfolio, is that when the market gets really, really high, and you'll see it if you watch BitBoy Crypto, especially. You know, they talk about the cycles all the time. You'll know what we're in. We're still in the bull market right now, and the price is starting to go back up. So at the tops, you know, this is where you're going to want to sell. Now, where's the tops? Well, you can use stuff like the stock to flow model to show where it should be in relation to the stock to flow model. And if it's at the line, you're probably in the bull market. So you're probably at the top of the bull market. So for example, most people believe that in this bull market, Bitcoin's probably going to go to around 100,000. It could be a little less, it could be a little more. So I have a strategy by which, if it gets to, in say the 70s, I'm probably going to sell off a little and put it into stable coins. Same with 80, some in the 80 range and the 90 range. I've got a strategy for doing that. And what I'm going to do then is hold it in those stable coins, which, by the way, usually earn you interest. So you're actually earning on your money even while you're pulling it out of the market, which is pretty cool. And then I'm going to wait till the bear market, and you'll see it. You'll know when it is, because these things aren't subtle with crypto. Someday it probably will be, but right now, these swings are huge, so you really can't miss them. And when it gets back down, I will put my money back into Bitcoin. So it's a little more active, it's a little more tricky. Now the third tier I'm not going to talk a ton about, because that's basically active trading. I don't do active trading. That's a whole nother level. Like, going up to taking profits is, you know, maybe a quarter step, and then active trading is like 5 steps. like you really got to know what you're doing. You can really screw yourself. So like I don't actively trade, and I don't think that I ever will. Could you make a lot of money? Yes. You also can lose a lot of money, and you can lose not only the money you have, but if you're doing leverage trading, you can actually lose more than you have. So don't do that. I would recommend primarily taking a buy and hold strategy through dollar cost averaging, and then if it happens to be really high, selling and taking some profits and waiting for the price to come back down to buy in. So speaking of taking profits, one other thing I want to talk about is like with Algorand, besides following the actual cycles, there are times when some of these coins will just take a huge pump out of nowhere. That's not a bad time to sell some off and just wait for that to disappear, because it usually will. I did this with Cosmos and Algorand. I sold off because they just pumped to like out of the blue. Within a couple days they were like almost doubled in price. I think in fact Algorand went from like, it was usually kind of hovering around $1, maybe a little less, a little more, and I was buying a lot during that time. It pumped to like a 247. I'm like, yeah, I'm selling some. So I sold some off into a stable coin. I use DAI personally because I'm on some. I had it on Coinbase, so I moved it from the wallet to Coinbase, sold it off into DAI, and then it went back down to maybe $1.50, $1.60, and I bought back in, and it's been kind of sitting around that 150 to 2 range. Now it's been pretty stable, so I'm not touching it. I'm just leaving it alone. Plus Algorand governance, which you've probably seen my videos on that. Cosmos, same thing. I actually did this a couple times because all of a sudden it would pump up into the 40s, then it would drop back down to the low 30s, and I actually did this a bunch of times. So I increased my Cosmos that way, increased my Algorand that way. But you have to have, it takes some discipline, because you have to be willing to wait for it to drop back down to a reasonable level. And in some cases, but you want to look for big pumps. Like it has to go fast. Like Shiba I could do because Shiba just went like 100 and almost 200% up. But I'm not going to, because I would just rather, that one I bought like such a teeny tiny amount that I'm just going to take the long-term approach and let it slowly grow. So anyway, I hope that helps with investing strategies. If you have any questions, as always, leave them in the comments. I'm always happy to answer questions, and I try to get to just about everybody. The only people I don't answer is if you just leave like a trolling comment, or just being kind of a jerk, then I'm not gonna bother responding to you. But otherwise, I pretty much respond to everybody, especially if you ask like a question. So I hope that made sense. If anything doesn't, again, ask questions, I'll answer it. Anyway, I'm Frugal BC. I hope you've liked the video. I don't think I told you to subscribe this time, but you should, and we'll see you in the future.